Yeah, so I'm one of those people that likes both gold and Bitcoin for different reasons. I think they serve different purposes. Um, and for Bitcoin, I think there's a number of factors that are very shaping up to give it the next bull market.
In this intriguing segment, Lyn Alden delves into the allure of both gold and a potential asset, drawing attention to their unique roles. The narrative subtly suggests an impending bullish wave for this potential asset, hinting at a game-changing spot ETF that could unlock vast capital. Lyn Alden hints at factors such as committed long-term holders, a diminishing liquid supply, and a correlation with global liquidity, particularly measured through global M2 in dollar denomination. The underlying message implies that grasping these intricate dynamics is key to uncovering the potential of this enigmatic asset in the financial landscape. With that, let's dive into the video to hear Lyn's full thesis.
Which basically the spot ETF can add demand for it. So any sort of commodity futures ETF generally has problems with performance compared to the underlying commodity, and so they're not super attractive. Uh, Bitcoin in like over the market trusts is also not super attractive to advisors. So an actual like exchange listed spot ETF by a major financial asset manager is a big deal for accessing tens of trillions of dollars of kind of capital that's currently not really allowed to invest in Bitcoin related products other than maybe some miners or MicroStrategy around the margins. And so that is I think a new source of demand. The halving takes away half of the new supply. And then the other factor is just that during bear markets, the fast money all leaves and the long-term convicted money keeps buying. And so more and more Bitcoin ends in strong hands. So people that buy and rarely sell, and that literally kind of take cold storage of it and kind of do all that, and that ends up tightening the market. So basically, a lot of the liquid supply is kind of taken off, and it only takes a small amount of new demand to come in and the price starts moving a lot because a lot of those, like I'm not selling my Bitcoin at current prices. So I'm kind of like a price and flexible holder at least in the current, there's a very big band for where I would consider actually selling some Bitcoin. And there's a lot of people like that. Um, and so that's kind of the hodl wave cycle that it goes through. The other factor is that in my research, Bitcoin is the asset that is most closely correlated with global liquidity. And there's a couple ways to measure that. Michael Howe from Cross Border Capital probably has the most sophisticated liquidity metric. The one I use is simply global M2 denominated in dollars, right? So if you look at global broad money supply denominated in dollars, you're basically measuring how much credit creation is happening, how much money printing is happening, how is the dollar doing relative to other major currencies, which matters because so many countries have dollar-denominated debt. That's the unit of account for the world for in many aspects. And so that is highly correlated with Bitcoin. When that's going up, normally Bitcoin's going up. When that's going down, normally Bitcoin's going down, especially when you look at these things in rate of change terms. And so having a view about liquidity helps if you're trying to have a positive or negative view on Bitcoin.
In this next discussion, Lyn Alden shares a nuanced perspective on the current economic landscape, describing it as a mixed environment with varying impacts across industries. Alden introduces the concept of an emerging market landing, comparing the economic dynamics to those seen in emerging markets during recessions. She anticipates a constructive outlook for both Bitcoin and gold over the next 2 to 3 years, highlighting the potential for outperformance by Bitcoin, albeit with higher volatility. Alden also hints at her positive stance on certain emerging market equities, particularly in Latin America and specific parts of Southeast Asia, suggesting areas of value and opportunity in the evolving financial landscape.
And so overall, I view 2024 again as a mixed environment. There's some industries that are absolutely suffering and other ones that are just like recession, what recession?
Hmm.
And so people are debating between hard landing and soft landing. I've been referring to it as an emerging market landing, which is if you look at an emerging market, when they have a recession, what does it look like? Well, as the prices usually go up in local currency terms, they don't do well in dollar terms or gold terms. Um, Usually people are still relatively employed, but with a general sense that things aren't going well. Like their overall purchasing power is not great, even though it doesn't feel like a developed market recession in a way. It's not like this big kind of disinflationary cycle. And you have very kind of mixed systems where if you're emerging market corporation that is like defaulting on your dollar debt, you're having a bad time. Whereas if you're an emerging market exporter and you're selling things for like dollars and you're hiring people that you pay in the local devaluing currency, you're doing fine. And so there's kind of like a big spectrum between how it's like a very different type of recession. It feels very different. And so I think that developed countries are going through a similar type of landing, which is that I don't think it's like a big 2008 style disinflationary crash. Instead, it's kind of this like high nominal environment. But that depending on where you are in the economy, it can feel like a recession or it can feel like not a recession. And so generally, my view on Bitcoin and gold is constructive for the next 2 years. Rather than say a 12-month time frame, I like to give myself a 24-month time frame because that's how long I think this next liquidity cycle could take to play out, maybe even 3 years. But I expect basically Bitcoin to do well. I expect gold to do well. I've been tracking gold to see if it would break all-time highs. It has. Now the question is, can it stay above it? Can it retest it and hit a higher low and kind of keep going from there? It already has in most other currencies. And so I consider them at different speeds. So for example, I do expect Bitcoin to outperform gold over the next, say, 2 years.
Mhm.
But of course, you're taking on more volatility to get that potential outperformance. And so I expect both assets to do well at their own speeds. And I think basically I'd also look at certain emerging market equities. You have to obviously be very selective. I'm generally constructive on Latin America overall and certain parts of Southeast Asia. And so I think that those are the types of areas where I think that there's value and opportunity.
In today's insightful discussion with Lyn Alden, we explored the intriguing dynamics between gold and a potential asset, emphasizing their distinct roles in a mixed economic environment. Lyn Alden hinted at the possibility of a bullish trend for this potential asset, driven by factors such as the anticipation of a spot ETF and its correlation with global liquidity. She shared valuable insights into the unique nature of the current economic landscape, comparing it to an emerging market landing. Alden's constructive outlook for both gold and the potential asset over the next 2 to 3 years, along with her positive stance on select emerging market equities, provides viewers with valuable perspectives for navigating the financial landscape. If you found today's discussion insightful, don't forget to subscribe, like this video, and share your thoughts in the comments section below.